Hello out there, it's Jonathan Bengal, and I'm coming to you here, pre-recorded in this case. And before I go any further though, I just want to give a big shout out and a thank you to Glory Ali. And Glory, this video is actually dedicated to you, but just so you know, because you want a free tax tip, and just the tip, it's actually going to benefit many other people who watch this video. You inquired about what is the best type of tax entity you should be. It's interesting that you brought this up as a tax question because, believe it or not, my core talk is all about sex and entities. Now, how the heck do the two correlate? Well, it's better to explain it to you like this. You see, in the world of business, you have something called a legal protection. This is going to be your LLC, your limited liability company, or if you are partners, it's going to be limited liability partnerships potentially. Or maybe perhaps you are a corporation, or perhaps you're none of those, and you are just what we call a solopreneur or a sole proprietorship in regards of law and tax law. Now, what in the world does this have to do with taxes? What are sex, I should say? Well, it goes like this. You see, the thing about it is you wake up in the morning and you say, I'm going to go start a business, and I'm going to become a business owner. And I have no protection of any kind. I just start selling widgets or providing a service. And you do this without thinking about what kind of protection you should have. It's no different than having sex with somebody unprotectedly. You see, all it takes is one time to get a really bad STD. And it can take a long time to cure up that STD. Oh, like that. It can take a long time to clear up that STD if you're not careful by having unprotected sex. When you're a solopreneur or a sole proprietorship, it is like practicing unsafe sex. And something can, in fact, infect you. And in business, should somebody get upset with you and sue you, they are going to be able to come after you, not only at your business assets, but also your personal assets. A limited liability company, I like to use the analogy of a dental dam. And unfortunately, I don't have an example of one, but now I'm realizing I need to get me one. The point about it is a dental dam is a rubber apparatus that can be used to protect interesting body parts. And the thing about it is fluids can still kind of come out from the sides, but it's not direct contact. And that's what an LLC does, a limited liability company does. It keeps all of the ickiness to the side, so to speak, but it still has the potential to come back and infect you, potentially. So it's not 100% risk-free, but it also definitely minimizes the risk, just like in the case of having unprotected sex versus a dental dam. Now, C stands for the corporation or the condom. And in this case, a condom, as we know, is about 99.99% effective, and so are corporations. They are also 99.99% effective, meaning that all of the juices are captured and don't come out of anywhere. And here's the thing, though, just like a good lawyer and somebody who maybe walks around with a condom in their pocket all day long and never uses it and it tears away, so can happen with the C Corporation with the right lawyer who understands how to bypass the protections. And how do you violate it? By commingling your funds. And this is true of the LLC as well. The moment that you commingle your personal life with your business life, meaning I use my business money to pay for personal things, it is a violation of the protection. And it is like taking a condom and piercing it. And a lawyer who's really good will know when you pierced it and get through to your personal assets. Now, that's all fine and dandy. But here's the thing about Uncle Sam, aka the IRS, and the ante, whatever state you happen to live in. Exactly. So in anti-Arizona, in my case, here living in Arizona, and we've got Uncle Sam. Now, these two relatives are extremely prudish, extremely prudish. And in fact, they have designed law to punish people who decide to have unprotected sex, aka the solopreneurship. What we mean by this is that because you choose to have unsafe sex, in this case with business, exactly, Uncle Sam and Auntie Arizona, but Uncle Sam primarily, hits you with additional taxes called FICA tax. Stands for Social Security and Medicare tax. It's a mandatory 15.3% tax on anything that you earn over $400 as a sole proprietor. That's the truth. And not on top of that, you have to pay something called ordinary income tax on top of that income. So it's really a tried tax system. And Uncle Sam doesn't like it when you practice unsafe sex. And so it likes to punish you, and it likes to tax the hell out of you as a result of that. Now, the next layer, though, that gets complicated is you say, well, I'll use a dental dam in exchange. I'll create an LLC. But if you're by yourself, this is where Uncle Sam goes, I don't think so. Good try there, but you're still not 100% protected. So I'm still going to punish you by charging you FICA tax on anything made over $400. And so again, Uncle Sam comes into the bedroom and makes your life hell. Now, there on out lays the issue. So when you finally put on a condom or make your mate use one and use a corporation, Uncle Sam loves protection. He loves safe sex. And so because of that, he actually allows us to separate the taxes on both locations from the personal individual and the corporation. So the corporation becomes responsible for its own taxes, its own liability, everything, and is not necessarily subjected to FICA tax. However, limitations do apply. So the thing about it is the more risk you take, the greater the taxes will be, because Uncle Sam doesn't like you to have unprotected sex. Now, the question then becomes, well, JB, when should we move from an LLC into a corporation? Or better yet, you've heard this. Many people have heard this, the S corporation. Now, let's not get confused here, because you can be a limited liability company and you can still ask the government to look at you as if you are an S corporation, which is a subchapter S of the corporate code under Title 26 of the Internal Revenue Service. Damn, I just got totally technical with you. My thing about this is this. As corporations, essentially what happens is you earn the income inside of the S corporation, and as you earn this income, any net profits flow through downward to the individual taxpayer, where it's picked up as ordinary income subjected to ordinary income tax. Now, the thing about S corporations, and in some cases C corporations, we are required to pay you compensation for managing your S corporation or your C corporation. Why do we have to pay you wages? Because Uncle Sam realized a long time ago that the reason why we would form an S or a C is to mitigate the FICA tax, this mandatory 15.3%. It knew that we were trying to mitigate this tax. And so it said, we don't think so. So in 2017, unfortunately, somebody got caught red-handed with their pants down on their ankles, and the IRS slapped them and required them to reclassify their tax-free distributions. That's a whole other topic for a whole other video. And as a result, reclassified it, a portion thereof, as wages and subjected them to the FICA tax. So when you're an S corporation holder, a shareholder of an S corporation, you must pay yourself reasonable compensation. Reasonable used to not be defined until 2017. And now, luckily, we actually can spend the time to calculate exactly what your wages and your compensation should be. One word of caution is not, let us not confuse wages with a payroll check with compensation. Compensation can come in many other forms other than paying you with a W-2. Now, with that being said, the question is okay, great. So I'm ready to go into an S corporation. My personal advice is this. Business owners must look at all of the facts and the circumstances before they go from a single member disregarded LLC, the dental dam, into the S corporation, which is kind of like a small condom in a way. So before you make that move, one has to outweigh the cost of actually operating, managing, and running like an S corporation. Because the moment you become an S corporation, the level of compliance increases. We have different types of accountants all of a sudden, different type of accounting systems, bookkeeping systems, payroll, benefits, you name it, it goes up. The cost to implement and manage and maintain an S corporation does increase. However, with the right planning like we do, one can actually mitigate and save a hell of a lot more taxes by moving into the S corporation. But here's the thing, one has to strategically think about when is the right time. And quite honestly, personally, we will typically advise our clients to move into the S corporation world when they're netting, so gross minus all of my costs, netting my net income is about $10,000 to $15,000. Is usually when we want to move you away from the Schedule C, the sole proprietor or the single member LLC tax structure, into an S corporation. But check this out. Because of the 2018 tax reform, the Tax Cut Jobs Creation Act or something like that in 2018, because of the creation of these new reform laws, we actually now need to address and to look at potentially making one into a C corporation. Now, there's a reason why you would wear a condom other than to mitigate the taxes on a severely different level, but maybe because we need to think about ways in which to shift income legally into a C corporation and take advantage of more deductions that are typically not allowed when you are a an S corporation, or when you are a single member LLC. So with that in mind, it sounds super confusing, but the oversimplification is to think of it in terms of sex. Sole proprietor is unsafe sex. I'm going to pay a whole bunch of money in taxes because Uncle Sam does not like unprotected sex. I can use an LLC, and now I have options, but even then, Uncle Sam doesn't like it until you decide to use safe sex and move into the C corporation or elect to be treated as an S corporation. So with that in mind, I hope this was beneficial to you, especially to you, Glory, in figuring out what type of entity is the best entity. Now, one thing to keep in mind before I end this conversation is this. Depending on one's profession, be it services or goods and services, the riskier it is that someone could sue you should determine which type of entity you would select for legal protections. And I'm not a lawyer, so I can't give one legal advice in terms of the best legal protection. That's up for my lawyers to have that conversation with you. Especially if you're interested, you can even join our program at Business Warriors Academy, where we actually team up with other business attorneys and credit specialists to make sure that you're maximizing your protection. Now, with that being said, once the entity is determined in terms of legal protection, we then need to quickly get to work and determine which is the best tax plan to save you the maximum amount of taxes on the income that you're about to earn. I hope this didn't confuse you too much. And if you like this video, please make sure to subscribe to my channel here on YouTube and click the subscribe button along with the alerts, because I'm very spontaneous and I oftentimes interview people on the spot and we have these types of conversations. For you, Glory, I dedicate this to you, and may you be happy, may you be free of suffering, and may you never be separated of your happiness. And more importantly, in terms of your entity selection, if you'd like to know how it pertains to you specifically into your personal tax life, let's get naked at nakedtaxtalk.com. You can also give me a call at 602-456-7667, and we can talk very specifically about when and how is the right time to move into something other than what majority of people play in, which is solopreneurship, aka sole proprietorship, aka unsafe sex. I'm Jonathan Bengal here, host of Naked Tax Talk. Thank you so much for this opportunity. And again, I hope and I wish that this video brought a lot of value to you.